In this episode of the MSA Rental Market Update, we are looking at the Fort Meyers rental market for multifamily properties, more specifically, conventional apartments. So as you can see, the Fort Myers metro statistical area is drawn out here in southwest Florida. We can see we have Miami over here, West Palm Beach, Fort Lauderdale. Here is Tampa, Clearwater, St. Pete, Lakeland, and if we scroll ever so slightly up, we can see Orlando here. So now that we know where the metro statistical area is located, let's go take a look at our filters and see that, as usual, we are excluding all corporate, all military, all senior, and all vacation. And vacation and senior are in abundance down here in the Fort Myers area, so very important that we exclude that when we're just looking at conventional apartments. Then we are only looking at market and market affordable. Okay, so next we go to location. We can see that we are in market, metro statistical area, Fort Myers, Florida. So let's go take a look at all three asset classes combined in the analytics, and then we'll look at each individual asset class and see if the Fort Myers metro statistical area, which was affected by Hurricane Ian at the end of summer last year, if you remember, pretty devastating hurricane, we'll see what effect that has on this apartment market. So let's go take a look at our analytics. So here is our supply side snapshot. You can see there are 708 conventional apartments in the marketplace, totaling 33,588 units. There are 3,627 units under construction, and there were 1,044 more apartments that were rented in the last 12 months than went vacant. In the prior 12 months, there were 4,750 more apartments that rented than went vacant. We have a slight tick up in vacancy. We were at 6.1. We are now at 6.7. So looking at that, it doesn't look like the hurricane affected the market too terribly bad. We are sitting still with a fairly decent year-over-year increase in rent from 1810 to 1934. One of the larger we've seen. We'll see what it looks like quarter over quarter. As usual, we are not looking at the capital market. We are only looking at the space market. As I scroll down, we can look at the long-term occupancy average, and over the last 22 years, this market likes to be at about 92.3%, and it's currently sitting at 93.3%. So one of the few markets we've seen above the long-term occupancy average, but in South Florida, we've seen that pretty consistently. We saw that with Miami, we saw that with Fort Lauderdale, so not too terribly surprising there, even though in Tampa, we did see it struggling a little bit more than the East Coast. So it looks like from this vantage point so far that Fort Myers may be following the the Miami and Fort Lauderdale markets. But let's go take a look at the data and see what the data tells us. When we get to the end, we'll go ahead and plot it on our market cycle chart and see exactly where we think the Fort Myers metro statistical area is. So let's go take a look at the data for all three asset classes first. So here is the rent analytic data for all three asset classes. We do not look at asking rent. We don't care what the ownership is asking. We only care what they are collecting. In the first quarter of 2022, they were at 1822. Went up to 1831, down to 1824, up to 1933, down to 1924. So interestingly enough, we went down in the third quarter, which is when the hurricane hit, and then we went up in the fourth quarter. So showing more demand. We'll see if the absorption tells us the same story, but very interesting that we have a little bit of a roller coaster effect in the rents, especially as across some of the country we've seen already. The month of January has shown an uptick in a few of the markets. Here we're seeing a bit of a downtick. So let's take a look at our deliveries and absorption. So 412 delivered in the first quarter, 399 absorbed. Good, strong absorption numbers. Then no delivered and another 116 absorbed. Good, strong numbers. 448 delivered, only 160 absorbed. Not good there. Then the hurricane hits. deliver another 450 units in the fourth quarter, and 620 absorb. So I'm wondering if the market, because of the damage in the homes that were east of that main road or west of that main road in Fort Meyers, I wonder if they sought shelter in some of these apartments, which is what caused this uptick in the fourth quarter. That very well could tell that story, and that may be why we're slowing in absorption, because now some of those homes may be renovated back where they can move back in at this point. So that may be why we're seeing that downtick. So very interesting. It's neat how we can look at these numbers and kind of draw our own conclusions. But it's kind of neat to see. What's good here, though, is that when we look at all three asset classes, the Fort Myers market is acting appropriately to demand-supply fundamentals. Where there is stronger demand, we have rent increases. Where there's weaker demand, we have rent decline. So it is acting appropriately for all three asset classes. Let's see if each individual asset class does the same thing and tells us the same story. So let's go look at Class A first. So here is our Class A rent analytic data. There are 36 properties totaling 9,875 units. In the first quarter of 2022, we were at 2029, went down to 2023. Now that's the first time in any of the markets that we've looked at, and I believe this is the 41st market, where we've seen a downtick between the first and second quarter. Very interesting. Then down very, very slightly again. I'd say just about stabilized right here, about between 2029 and 2021, up to 2179. And then down to 2151. So big jump, $150 jump in the fourth quarter tells me that there was definitely some strong demand for these apartments in the fourth quarter, which means I believe some of those people that had to move out of their homes for a little while rented these apartments. This number shows that pretty drastically, and now as they're moving back, those numbers are starting to go down again. So let's take a look and see what deliveries and absorption tells us. So no deliveries. So all our deliveries that we saw in all three asset classes were all in the B class. And if we look at our absorption, we could see 214 absorbed in the first quarter, then 82 absorbed in the second quarter, giving us an uptick, even though we saw a downtrend in rents. Then another 124 absorbed, giving us a higher occupancy, even though, again, we saw a downtrend in rents. And then we had the really big jump in rents into the fourth quarter, and we did not have a really big absorption number, kind of a fairly small absorption number going in, taking us up to 95.6. So between these two, we got there about 128 or 188 units in the second or third and fourth quarter, got us to those really high rents, and now they're starting to probably head back to their homes, would be my guess. I don't think, other than people in the Northeast moving to Fort Myers because it is a big retirement area, there's nothing really economically happening there other than rebuilding after that hurricane. So pretty interesting story. So that's the A class. Let's go see what story the B class is telling us. So here's our Class B rent analytic data. There are 182 properties in the market, totaling 13,445 units. Looking at effective rent, first quarter we were at $1,853, went up to $1,862, down to $1,845, and then, as with the A's, up $100 in the fourth quarter. My guess, once again, believing that people needed apartments. And, hopefully the absorption shows a little bit stronger here, because we're starting to see that there may have been some price gouging on these rents, which I'd really hate to believe, but this may be telling that story. And then a little bit down in the first month to 1939 of 2023. So we come and we look at our deliveries. We did have deliveries, as we showed in the overall. Now we're showing them in the Bs. So we delivered 410 in the first quarter, only absorbed 227. no deliveries in the second quarter, and 123 absorbed, so getting real close to where that 410 was delivered. Then 448 delivered and 91 absorbed, so not good there. We went an up tick in occupancy from 92.7 to 93.7 and then down to 91.2. And then, okay, we do get a big number here where we had 452 deliver and 578 absorb, taking that occupancy back up to 92.4, giving us that $100 an increase. So owners, you are reprieved. Thank you for not telling me that you just raised those rents arbitrarily. I appreciate your effort there. Thank you very much. Then we had 308 deliver in the first month and only 75 absorb, and we had that decrease in occupancy, and if you remember, we had that decrease in rent. So the demand supply is reacting appropriately, maybe a little bit high on that rent. But when you have all those people that need units all at once, you got to get those units ready. That's where that increase can come from. So I'm not gonna knock that too terribly bad. All right. So Class B is telling us a very similar story to the Class A's. Let's go see what the Class C story tells us. So here is our Class C rent analytic data. There are 428 properties, totaling 9,871 units. Looking at effective rent, we were at $1,281 in the first quarter, went up to $1,324, up to $1,334, up to $1,360, up to $1,385. Please tell me that we did not see, well, it doesn't matter if we do. So my guess is we're going to see negative absorption in all 4 quarters and maybe even negative absorption going into the first month of 2023. But if we look at this vacancy, look how low that vacancy is. Okay, that takes us down to only 5.3% vacancy. So the fact that these rents are increasing is in line with this vacancy because 5% vacancy is too low. We should be a little bit more than that. So as an owner, you're going to increase rents until you get below that vacancy. So I am not going to knock these rent increases, but let's look what absorption did. Again, my guess is that they went down all 4 quarters, but let's see if it did or not. And as I suspected, it did. Okay. But as I said, we are very, very low in vacancy, very high in occupancy. So I am not going to knock the ownership here for driving those rents up. I'd still continue raising the rent. So I think we're going to see in the future with Class C, at least for another quarter or two, where the rents are going to continue to go up until you get this vacancy and occupancy, till you get this occupancy down to about 93%. Get it down, remember 93 1/3 is about where this market wants to be anyway. So once it gets down to that point, I think then you'll start to see those rents ease up a little bit. So good, strong fundamentals in Class C. Demand supply reacting appropriately with the A and B. And honestly, Hurricane Ian really did not hurt the rental market too terribly bad. As a matter of fact, it positively affected it, which tells me not a lot of apartments were across that main road that the storm surge affected, and that those apartments withheld the wind damage that would have been affected by Hurricane Ian, which I believe came across as a Category 4, if I remember right. It was either a really strong 3 or a Category 4. So the market held up really well in multifamily on the rental side. So let's pull up our market cycle chart and see where we would plot it. So we know we were 1% above that long-term occupancy average. We are seeing some waffling between the deliveries and absorption, primarily because of what happened with Hurricane Ian. And we're still seeing some rent growth in the Class C space. We've seen some roller coaster rents in the A's and B's. So I'm pretty comfortable plotting Fort Myers, Florida right here on this point above the long-term occupancy average in the oversupply phase. I think as this market settles and people will move back into their homes and leave those apartments, and as the absorption continues to slow in the Class C, that we will see this market start to continue its downtrend, get below that long-term occupancy average and come back. I don't think it will be here long in the recession phase, primarily because this is a very strong retirement community. So I think we will see it recover fairly quickly because, as we know, due to political reasons, there are droves of people moving to Southwest Florida. So that does it for Fort Myers, Florida, and we'll conclude this week. So this week, if you have not seen them, we covered Fort Collins, Colorado we covered Austin, Texas on Monday, San Jose on Tuesday, Richmond, Virginia on Wednesday. We did Greenville yesterday and Fort Myers today. Stay tuned next week as we start the week with Jacksonville, Florida, then head over to San Antonio, Texas, come back to Columbia, South Carolina, do Northwest Arkansas, home of Walmart, and we will finish the week with Albuquerque, New Mexico. So you guys have a great weekend, and I will see you on Monday as we take a look at Jacksonville, Florida.